Hej och välkomna till Investor Studios kvartalsrapporter. Idag har vi Maha Capital som i morse släppte sin Q3-rapport för 2025. Mahas vd Roberto Marchiori kommer på länk och på engelska presentera resultatet och aktuella händelser under det gångna kvartalet. Ni som tittar live kan som alltid då ställa frågor till management och vi kommer hantera de frågorna i slutet av presentationen. Och hinner du inte få svar på just din fråga så hänvisar vi då med varm hand till bolaget och bolagets IR-sida. Så med det är det hög tid att hälsa Roberto välkommen. Presentationen kommer nu att fortsätta på engelska. Roberto, nice to see you, and I believe you're in a cloudy Sao Paulo.
Carl, nice to see you again. Good afternoon for you. Yes, here's a cloudy day.
Well, we have a brilliant sunshine, but much colder than you have. So please, without further ado, go ahead.
Thank you, Carlo. So thank you, everyone. A nice good morning for you, or good afternoon if you are in Sweden. I'm going to start here the third quarter presentation. So talking about the main highlights of the quarter, we end up the quarter with a very strong balance sheet of more than $108 million in cash. Also in terms of cash balance and looking for the credit operation of Q, we already have more than $52 million of approved lines, credit lines, with an average yield of 18% annualized. Also very important for the quarter and considering our shift on our strategy, we divested of Brava Energia for $78 million. We also divested of Illinois Basin asset for $3.5 million plus earnouts of up to $600,000. This will be also important for us going forward to enhance even more our balance sheet and releasing dry powder for us to use in the credit side of our new strategy. And also, I think it's important to mention here that we reduce around 35% year over year on our recurring G&A. So I mean, we are still working to have a more efficient and linear structure. And talking here a little bit about Q, right? So on the business combination, we are having basically acquiring the credit operations and also the technology from Q World. And now we are working and waiting for the AGM to approve this transaction. On the business side, I think we are mentioned with Paulo in the last two webcasts, but I think it's also very important to remember, right? So we have WorkQ, which is basically the local currency credit platform, so we can optimize the client's working capital cycles on the buyer and on the seller side. And also we have as other main product and core business, the global trade card, where we always call GTC, which is a US denominated credit card operation to provide B2B and travel and entertainment cross-border payments to optimize these payments in a broader scale. So I think the main message of the quarter is that we are shifting from the oil and gas to focus on Q credit operations. So talking about a little bit and again about Q. So talking about the footprint. So the footprint and geography reach, considering the Q multi-market credit issuance, we can provide credit solutions across Latin America and Canada. So in the green marks here, we have the local operations, talking about WorkQ in Canada, Mexico, and Brazil. We have a Q's head office located in Miami, United States. And then we have on the GTC, on the blue marks here, their penetration inside Latin America, so providing US credit lines on Colombia, Peru, Bolivia, and Chile. Of course, we want to also bring this for other countries in Latin America. So Summing here, we have GTC license comprehending the whole America, Latin America, and also Canada, while Workio currently has the license to operate in Canada, Mexico, and Brazil. And talking a little bit about what's the difference between Workio and GTC, basically together, they are a very robust suite of corporate finance and payment solutions for our clients, issuing in multiple currencies to help our clients to manage this together with their suppliers and optimize these working capital cycles, B2B and T&E, the travel and entertainment expenses globally. So when we look for Workio is a working capital and inventory optimization, again, in local currency. So we have this solution for Mexican pesos, BRL, Canadian dollars. We can provide terms from up to 120 days. We can collect both interchange and interest rates depending on the buyer side and the supplier side. And the value proposition here is basically streamline the payment between buyers and suppliers, where we can anticipate suppliers' receivables from the term of their clients and also give more additional terms for the buyers to pay and accommodate the cash flow necessities. On the global trade card front is a complementary solution for our clients. I think that's important to mention, where we can provide these cross-border payments for T&E and B2B. The currency is US denominated. We also can extend additional terms, but the normal is to have a credit card solution. So I mean, it's an average of 45 days considering the invoices. We also can benefit on the GTC, the interchange fee and the interest rate if we provide the additional extension of the term. And this is basically a very important additional solution for international acquisitions, right? Where we can accommodate and facilitate the financing payment process across different jurisdictions. So this is an enhancement, a very value proposition for our clients. So both together is a very unique combination, and then we can act as a one-stop shop for the client necessities in the short term. I decided to bring here a little bit about Q credit operational and historical performance. So since we started our relationship with Q, where we set the loan agreement in July 2025, the portfolio, the outstanding credit has increased around 18%. So we started with around $30 million. And now we are with end of October with $36 million in lending, outstanding credit. And below in the chart, we also show the potential revenues that we are talking about, where we see here yields, annualized yields ranging between 18s to 20s, high 20s, and bringing this monthly revenue, which this will not be comprehended into our financial statements, but of course, after closing, we expect to bring these revenues. We will bring this revenue inside our net income and P&L. During October, both solutions, Workio and GTC, we have approved around $52 million in lines. Of course, this can present us a potential transaction volume of around $300 million. So since September, we increase not only the approved credit line, but also the potential of annual transactions. We have the same average and compounded average annual yield of 18% annualized. And we have now a balance between GTC and Workio around $60 million, which represents around 30% of the portfolio into GTC, and also 70% or $36 million on the Workio local currency solutions. As you can see, we have a higher annualized average yield on the Workio side, and a lower average yield on the GTC side. So this is why it's also important to have both solutions, so we can have a combined yield of 18% per year. Talking about timeline and when we expect to conclude the business combination and also the capital raise. So we signed the business combination documents during October. Now we are still working on the relisting process together with Nasdaq. We've been working hard and we expect to have a conclusion this during December. And then, of course, we expect to have the EGM, the extraordinary general meeting between December and January. Of course, we have Christmas Eve and New Year's Eve, so we need to accommodate this to approve the transaction and also conclude the $27 million capital raise in the same timing. And next year, we expect also to conclude, I don't know if everyone remember, we also have additional tranche of $80 million capital raise, which expect to conclude this and also implement the listing process in the US. So we expect to have everything concluded by next year. And before we walk into the financial highlights, I think it's important to remember, considering that we sold the American operation in Illinois and also Brava, you can see that our financial statements now are a little bit different from the previous ones because we classified the US operation as asset held for sale. So so just pointing and highlighting this because now we are not showing revenues anymore, basically expenses and financial incomes. So just to highlight these points, so everyone can better understand why we are changing a little bit the structure of our presentation. So here, talking about our financial highlights, we are focusing in the slide on the G&A and the EBITDA. So if you see the first portion of the slide here, we can show here the decrease on the G&A side quarter-over-quarter. I think the important message is we are totally focused on keep this very stream and very lean structure going forward. We can see a reduction of 35% if you compare to Q3 last year and around 18% if you compare to last quarter, which show us a very is a very good news considering the hard work we've been doing inside of Maha. In terms of EBITDA, even though we still have this negative impact, mainly because of the G&A, the lack of revenues, and also some additional non-cash expenses, we end up the quarter with around $3 million of negative EBITDA. But the positive news, we have the realized gain on Brava shares before we sell the position of around $7 million, and we end up the quarter with a net income of around $4 million, sorry. So I think this is the positive news of the quarter. And again, I think looking for the future, we can expect some changes in the figures. Going to the cash flow build up that we like to show and show here the strong balance sheet and dry powder. So we started the quarter with $88 million of net cash plus Brava shares. We have basically the main deviations during the quarter was the cash flow from financing. So we raised a $12.5 million debt by the time because we were holding Brava shares as collateral. So it was even though it was a liquid position, we want to bring more cash to start operating the Q transaction by the time of July and the loan agreement. And then we started to also make some loans into the GTC program in the context of the loan agreement. So these were the main impacts when we look for the cash flow from financing. We also recognize here the Brava shares realized gain. This, of course, is important because after the sale, this turned into cash. And we end up the quarter with a cash plus credits to Q under the loan agreement structure of around $121 million, being a net cash plus credit of $93.8 million if you discount the bank debt and also the co-investors debt that we collected for the loan agreement. But then as subsequent events, we fully prepay the debt because this debt was a margin loan. So once we have as collateral Brava shares, we have flexibility to use this cash, but after we decided to sell Brava shares, we need to fulfill the collateral with cash. So we didn't have the flexibility anymore. We were just going to pay interest going forward. So we decided to fully prepay this debt because by this time now, it didn't make sense to hold it. And then, as we mentioned before, we also sell the Illinois basin asset. So we collect the purchase price of $3.5 million. We are still waiting for the additional earnouts to crystallize. This earnout is linked to WTI, so we're just going to wait 1 year after transaction to calculate the earnout and collect. So we end up the quarter with 97.3 net cash plus credit, and this shows us the robust and strong balance sheet that we have to provide credits going forward inside the Q transaction. So my final remarks here, so I think the business combination itself is a very powerful combination between Maha and Q, because now we create a tech-enabled credit solution with a very high scalable platform with robust balance sheet and dry powder to provide credit going forward. This transaction enables establish a capital-backed credit platform to expand and also accelerate growth across very different regions operating under an American issuance license provided by Q inside the business combination. And looking forward, the transaction is very important because marks an important milestone inside our new strategy and new positioning to the market. Maha is very well positioned to capture a very significant growth avenue and potential find and benefits from these attractive high yields that we can find across Latin America on the B2B credit segment. We also benefit from the unique stamp provided by American Express network, while we also going forward, we will enhance with AI-driven the underwriting process, advanced analytics technology, and also data monetization capabilities. And also, I think one very important thing to look for is our US listing next year, so we can improve our capital structure. So after this final remarks, I end up here my presentation. So again, we made a very quick one, so we can have more time on the Q&A. So thank you, Carlo.
Well, thank you. And we have received a couple of questions ahead, and I can see that people are busy here on the chat line as well. And I will start with some questions around the legacy business, as I will call it. And we have some questions about Venezuela. You have extended your option in Venezuela until May 2025, as I believe. What are your thoughts about this call option?
Sure. We extended the call option maturity until May next year, right? At zero cost, I think this is important. And we also reduce at zero. We don't have any costs related to Venezuela anymore. I think my opinion is the geopolitical situation is very unpredictable. It's very tough when you look what's going on there. Of course, we hope things improve very soon there, not only because of this business, but also because of the people there. And I believe once things get better, I think we will bring more updates to the market and what we plan as an alternative for the call option.
Mm-hmm. So, and a follow-up question here is that will you obviously you're following your call option, but will you consider not only using the option as let's say a bargain chip, but will you be able to develop Venezuela, given the fact that you are now very focused on the financial side in Keo?
I think considering the current environment and geopolitical situation, it's very tough to try to make this call option and start operating this asset. So once we have a better situation there, and I hope this will come very soon, then we will reevaluate what can we do considering the new strategy and also what can we bring more value considering the call.
Time will tell. Thank you. And if you could talk us through the investment in Bolivia and in the Bolivian pipeline, please.
Oh, sure. I think the Bolivian pipeline is the kind of transaction that we like very much, because if you look the numbers, last year we collect $1,200,000 out of $1 million investment, so this is around 20% yield. This year we collect around $400,000, the double of last year, so now we already reach almost 60% dividend yield. So I think we are very happy to keep it. It's a cash cow portfolio generation company. So I think the idea is to keep this and keep milking the cow, if I say.
Mm-hmm. And if we try to round up the legacy business here, with all the divestments lately, and let's say you're going forward with zero cost in Venezuela, are you able to give us an update on how many? How's your staff situation? Surely there must be fewer on the employment payroll when you're moving from, let's say, the heavy oil industry into the financial business, or will we see that later in coming quarters?
Sure. No, that's a good question. I think we show that the work has been done, right? To reduce more than 35% the recurring G&A. Of course, we will reduce even more if you're considering the current structure of Maha standalone, because we will not have anymore some non-recurring expenses. But I mean, once we make the business combination and conclude operation, we will need to see a new G&A going forward, because we will bring the credit operation G&A inside. So we will not be comparable, but we will work as much as hard as now to also keep Q-World in a very lean operation.
And I will now move on to a couple of comments that we received, or questions on the financial side, and then we will come back in to focus on Keo here. But if I'm not mistaken, you did raise a $12.5 million loan in the beginning of Q3, and you repaid it in the beginning of Q4 this year. Walk us through there. What happened and why?
No, I think I pointed out this point, but basically, when we were working towards the loan agreement to GTC, we didn't at the time want to sell Brava shares, and we increased our liquidity by raising a margin loan using Brava shares as collateral. Once we sell the Brava shares, of course, the bank will lose its guarantee, right? So we need to bring all this cash and invest as collateral for the bank. So we will not have the flexibility and this available liquidity to use into Q, and also we will have the burden of having the interest rates reducing our cash. So considering this change into the strategy and the sell of Brava shares, we decided to prepay the debt, which was more valuable considering the position for us. Mm-hmm.
And we have a question about the restricted cash area. Even without the marginal loan, your restricted cash has increased substantially. Could you elaborate on what your plans are for releasing this cash?
Oh, perfect. No, we have a significant increase on the restricted cash. I will explain why. The first part of it was related to the bank debt, because remember, we prepaid the debt as a subsequent event. So this amount was released, which was around $12.5 million, right? So almost half of the restricted cash. The other part was related to the contingencies we have related to PetroReconcavo sale in the beginning of 2023. We are also working with Brava shares to collateralize the bank guarantee. Then after the sale of Brava, we have the same impact into these guarantees. So now we are working with the bank so we can release these cash collaterals next year.
Right, and we have a couple of questions regarding the Nasdaq-re-listing, and I believe you were giving us a timeline here saying December 2025, and then you had the AGM, which is in January, February, so we should expect the timeline to be, what, the first Q1 2026 for a relisting?
For the relisting, we expect between Q2 and Q3 next year.
Okay.
Because first we need to focus on the business combination, right? As I mentioned earlier before, we are working together with Nasdaq to complete the relisting process. We expect to conclude this between end of December, and then we have the process of calling the AGM, and then we need to wait like 1 month or so we can have the AGM and approve the transaction with our shareholders.
And I have a viewer question here, which is perhaps a little bit tricky to answer, but it's an easy one to ask, and that is, have you any indication about the Nasdaq viewing of the relisting as you are, let's say, a new combined with KEO? Have you received any feedback?
Yeah, I made a conference in Brazil to talk about challenges and our experience related to listing Brazilian companies in Nasdaq avenues, right? I mean, even though we are listed in Sweden, as we intend to list in the US, they invited us to make some comments and share our experience with the audience. And then I talked with Nasdaq team, and basically they totally support us. They are giving some ideas. Of course, I cannot mention this right now, but once the time comes, I'll be very happy to share here the next steps and the plans for the US listing. But I think we are on the right path, and hopefully during Q2 or Q3, we can conquer Manhattan as well.
Okay, and let's move on to KEO here, and we have a couple of questions here. One is if you can give us some sort of feel for the operations to improve and grow services in LATAM, and what kind of work. Well, what would that mean when you expand your work regarding, let's say, workforce and location and so on? But if we start with geographical on LATAM, you had one slide where you went through the geographical areas, but if you could remind us there.
No, perfect. No, the commercial and sales team is a very important element here to bring clients, but we need to think on the work queue and also on the GTC, right? Work queue, basically, we can have a sales team spread between Mexico, Brazil, and Canada. They can work together because, again, it's a local currency program. And GTC program, considering it has several jurisdictions, we also need to find senior executives, which they already know the right path to the clients. But we don't need to have a very significant and huge amount of individuals. I think we can have a short commercial team spread between the several products. But at the end of the day, this will be important going forward for our growth.
Mm. And if we tie that into the previous questions about the, let's say, the old company's workforce and the new workforce, could you give us a feel in the market for let's say, salary costs going forward? Would that be equal to the old company, or would it be lesser because you have fewer people, or would it be higher because you have more skilled people, if I could be so bold?
Sure. No, I think in terms of costs per person would be similar or even lower. I don't want to have this to show these numbers right now. We are still reevaluating all the new organization. There's some work so I can execute between now and closing. So once we have the conclusion of the transaction, I will show more information for the market.
Yeah, and also I have one question here. If you could just repeat that the cooperation with American Express. If you explain that to a layman like myself, how does it work?
So basically, Q World I think is the first or even the unique fintech that has American Express license to issue credit, not only in local currency, but also on the GTC program. So having this licenses is a very powerful tool to get access to a very robust network from American Express, right? I mean, they have very well and unique suppliers, which can indirectly bring you robust corporate clients. But also this proves that the operational side, the technology are also robust. It's not everyone that can have American Express license. So I think it's an important step here for the investment thesis and also to provide us this scalable avenue towards the growth that we imagine that we can have.
And we have a couple of questions about the capital raise already, so maybe we could just clarify that. Are both the $25 million and the $8 million agreed with the financiers? Or are there, will we need more information and decisions from the financiers?
Well, for now, the plan is to stick with this $35 million capital raise, right? The 27 at closing of the business combination, then we'll have the $80 million additionally between now and the listing on the US. And of course, this is a very important thing to mention because remember, we want to deploy our capital so we can have the benefit of the track record of the portfolio, and then we can bring senior lenders to the perimeter here of this operation. We can leverage our structure and benefit from lower cost of debts going forward. So this equity is very important for these early stages of the growth of the portfolio. And then we will work not only to think on liquidity strategy, but also on this senior facilities to provide low costs and attractive terms credit senior lenders.
And I will tie your answer into one question here. When and if are you forecasting to be self-financed, and how much credit do you need to have lent out to earn your upkeep, or will you continue to have a leverage on your capital, as it were, to increase your portfolio?
No, again, I think what we are thinking in terms of strategies, once we grow the portfolio, not only we are going to start to benefit from these revenues out of the yields, right, that we are mentioning, but also on the other side, we will still have also the track record to show for the senior lenders what's the key stats, the credit stats from this portfolio. And once we prove that these stats are good in terms of default and delinquency and so on, so I mean they are good corporate clients, then we'll have access on the debt capital markets to raise senior lender loans with a very attractive cost of debt, term, and other terms and conditions, which will be important on this growth story, this equity story that we are showing to reach this from $6 to $10 billion in total analyzed billings.
And another question, as you had various geographical areas with various, let's say, interest rates here, are you considering, let's say, borrowing in low interest rates countries like Canada and the US, and then lending out to high interest rates countries like Brazil or any Latin American countries? Or will you mitigate the loans so you don't have to worry about the currency effects?
Oh, that's a very good question. I think once the time comes, we are going to provide this information to the market, right? But I think, again, first we need to grow the portfolio, show the stats, and then, of course, we are going to evaluate the best strategy depending on the balance between the portfolio. So remember, we have a license operating in Brazil, in Canada, I mean, they have different interest rate, different cost of debts for sure. But I think once we grow the portfolio, once we know the cost between average jurisdiction or even a parent issuance level, we will decide what's the best for us in terms of cost. But for sure, if there's a loan availability, so we can provide credit among several jurisdictions and hedge the FX exposure, is something that we are going to evaluate and, of course, choose the best option for us.
So it will be a dynamic process. I will round off with a couple of share-related questions here. And when it comes to any sort of coverage of you now, do you have any plans on initiating coverage, or indeed are there any broker firms looking at you since you have transformed from an oil service company into a financial company? Are you able to answer that question?
No, this is a very good question, right? I think our investors knew us from the oil and gas operations. Now we are doing this very significant shifting in terms of investment thesis. So what I can say is, of course, we are working to provide more intel to the market. We are working to have this assessment and also this teach and lessons for the shareholders to better understand our going forward business plan, or what's behind, what can we provide in terms of potential revenues, costs, and so on. So we are working on this, and hopefully soon we'll have more news to be published to the market.
And we have another final question here that came in. Are you considering a dividend now or in the future? And do you have a policy there for the new co?
No, I think we need to reconvene this after the business combination inside the board. This is up to the board to decide. But of course, once we have a better view on the future, on the cash flow projections, this will be for sure reconsidered by the board.
Well, Roberto, thank you for that. Conscious of the time here, there are a couple of questions about the offering price on Nasdaq, but I'm sure that you will be communicating that via press releases and other channels. So with that, I will thank you. Invigorating and nice to see you again. So thank you for that, Roberto.
Thank you very much, Carl. Thank you everyone for watching us.
Och vi tackar er som har ställt frågor. Let's say thank you to all of you who ask questions. So, and if you have any further questions, we will refer you to the Maha Capital site. So with that, thank you and see you later. Bye.